This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss the importance of portfolio balance as many asset classes continue to rally. In particular, there have been many news headlines focused on Bitcoin, copper, gold, and silver. In this context, it's important to maintain perspective on the role of each of these asset classes and how they fit in a portfolio. After all, the most successful investment approach is not about chasing the latest asset class everyone is talking about or trying to predict a market. Instead, it's about building a truly diversified portfolio around a financial plan that aligns with your financial goals and risks. First, digital currencies are capturing headlines as lawmakers on Capitol Hill examine several key pieces of legislation this week, which you have seen referred to as Crypto Week. The House of Representatives is reviewing measures that would establish regulatory framework for digital assets. The anticipation of more widespread acceptance and adoption of cryptocurrencies has set Bitcoin to all new highs. But it's important to note, as this chart shows, that Bitcoin is both highly volatile and generally heavily correlated with the U.S. stock market. Over the period shown, Bitcoin and the S&P 500 have actually generated similar returns, but Bitcoin has experienced much larger swings. It's also important to note that other cryptocurrencies have not experienced similar gains to Bitcoin. So when considering these assets, it's important to make sure they fit within your portfolio, goals, and risk tolerance, rather than reacting to the latest news headlines. Next, let's talk about copper, another asset that has experienced a recent rally. President Trump's announcement of a new 50% tariff on copper imports drove the metal to new record prices, since the United States relies on imports for nearly half of its copper supply. Now, copper plays a critical role across the global economy, particularly because of its unmatched connectivity. It's essential in everything from electrical grids to the rapidly expanding sectors of electric vehicles and AI infrastructure. And unlike many other materials, copper often has no practical substitutes, making it a strategic resource in a tech-driven world. For investors, the real question is not whether to chase the latest price spike, it's how industrial metals like copper fit into a thoughtfully diversified portfolio. You see, true diversification means having multiple uncorrelated sources of return. With our multidimensional asset allocation approach, stocks and bonds alone are not enough to be truly diversified. That's why gaining exposure to industrial metals, ideally through a professionally managed strategy, can be a valuable addition to an investment portfolio. Finally, precious metals like gold and silver have long been viewed as potential portfolio diversifiers, offering unique characteristics that differ from traditional stocks and bonds. Now, it's important to understand both the opportunities and limitations. While precious metals have shown resilience during certain market downturns, they don't generate income like dividend-paying stocks or interest-bearing bonds. And just like stocks and bonds, their performance can be unpredictable, even when market conditions seem favorable. Now, for long-term investors, the key consideration is not whether any single asset class is performing well at the moment. Instead, it's about how each component fits within your broader financial strategy. Precious metals, like other alternative assets, work best when they complement rather than replace a well-diversified foundation of core holdings. Now, I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our white paper, Busting 7 Risk and Return Myths. You can click on the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.